Are we in a big bubble with IPOs? Keep watching to find out. Now guys, we do own some shares mentioned in the slides, and as usual, none of what we say is financial advice, purely educational. Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. Jonathan, so this is some of the stats for Bursa Malaysia. For those who didn't know, Bursa Malaysia is broken down to 3 basic markets, main, ACE and LEAP. And 2021 and 2022 is an excellent year as far as listing goes.
Yes, correct. So if you compare between 2020's figure over here, obviously because there's a pandemic, right? That's why there's a lot of things that's restrictive. But then it went up quite a bit. Like there's 30 companies and then 35 companies in 2022 actually went IPO. And actually another fun fact is that I believe in 2008, from 1990s to 2008, there's actually another thing, they actually call it second board and Nasdaq market.
Yes.
Yeah. And back then in the 2000 and to 2006, they actually listed quite a number of companies as well. So yeah, that's actually a pretty cool fun fact for you to know. But nonetheless, let's move forward. So these are the few industries that actually went IPO, what the companies are actually located at. So if you notice that 29% is actually coming from the industrial product and services. Now, this also actually, they are also riding in the semiconductor, even technology sectors kind of growth.
Because like precision engineering and stuff like that.
Correct. So yeah, there's inside there. And there's another segment called the tech. So why is it called tech? Because there is some companies that actually provide software, they provide like digital services. So yeah, it's categorized under the tech segment. But pretty much about 49%, it is tech related kind of business. So that's actually a cool fact for you to know for this IPO for 2022 to 2023. Very little coming from F&B and the rest plantation and whatnot.
Yes.
Okay, so this is the performance so far for all of these companies that went IPO. So if you notice, there's actually a very high chance for you to make money at a glance.
If you can get it.
If you can actually get it. So if you look at it, right, the highest one return that you can actually make money, and let's say if you sell it on that day itself, you manage to subscribe, you sell it on the day, you can easily make 344%.
ECA.
So that is a company, ECA Integrated Solution Berhad. And then followed by this LEAP company called DSR Taiko Berhad. So yeah, this company is actually an investment holding company, and they kind of sell like Musang King, durian plantation. I don't know why is it called DSR Taiko. Yeah, it's a pretty interesting name. And yeah, if you look at the top all these top companies, right, they are actually from the tech space. Right? So you see Nation Gate Holding Berhad is EMS. Then there's Coraza. Coraza is another metal sheet forming kind of company. And then SFB Tech, also another EMS kind of like company. So yeah, the outperforming one is all the tech related business. And then the one that is not performing, your Seng Heng, sadly, your Leeform is a metal industry kind of company. Your Unique Fire Holding, this one is a fire extinguisher company. Yeah. So you can see for yourself, this is how they actually perform so far. Now, okay, I actually did this probability. So if you manage to subscribe and manage to ballot your get the shares, right, in terms of your IPO, there's actually a 22% chance of you losing money. But the upside is that there's a 78% chance of you making money. So if you look at the returns, right, you can actually make your gains can actually just cover your losses.
Of course, important, assuming you sell on the day itself.
Yes, correct.
Very, very important.
Yes. Assuming you subscribe on the day when listing, you just straight away sell it. Yeah.
Because the stats are a lot more balanced once you drag it out over a few weeks.
Yes, so. Correct. But people like to get rich quick, right? So, who knows, right? Maybe they want to sell it like 2 weeks later after they went IPO. But cool fact is that if you actually invested in this tech-related business, so like your ECA or your Coraza, for instance, right, there's actually a 95.5% chance of you making money. So yeah, is basically to tell you that IPO stocks is pretty easy money making kind of investment right now, and it's actually pretty hot. Yeah, every time you see like when IPO went out announcement, right? Then the following day you see like this company have oversubscribed 88 times or 30 times.
Yeah, it's almost a sure thing that they will go up.
Yeah, so yeah, that is just some probability stats for you to know. And so I'm drawing a distinction between such an easy money making versus a bubble. Because back in 2020, 2021, it's also an era where it's also easy to make money, right? Yeah, your glove, your tag, crypto, NFT, everything is like easy 2 times or 3 times. So actually there's a bubble that is happening in the US. So if you notice, right, each time when a company where there's massive IPOs listing in the S&P 500, right, they tend to like went up. But also that is a period of time where the margin debt is actually the most because it's easy money, right? When people see it's so easy, they start to leverage, take on a lot of leverage, and they pump inside the market. But all of this, of course, it would result a downturn. That's where people start to rationalize things. And if you look, if you compare, right, in terms of their earnings, they're fundamentally those companies that went IPO in the US wasn't really that great. There's companies that not making even a revenue top line, but they still managed to fetch such a high valuation. So it's pretty ridiculous back then. Even actually now also in 2020. I mean, for example, like if you look at Coinbase, I believe, I haven't really studied Coinbase in detail, but I know that the company wasn't really making quite a lot of profit.
Yes.
And then there's another Grab Holdings, loss-making company. Cash flow also was kind of unstable, but still managed to fetch quite high valuation. So yeah, basically just to show you that there was a bubble back then. And the bubble actually did pop. So if you notice, right, of course, the index tanked partly not only because of the bubble, it's because of the inflation also. Inflation and high interest rate. That's why a lot of those, when you don't have low interest rate environment, right, easy money kind of thing, it would just disappear. And also there's also a reason why you see the IPO proceeds that they managed to raise in 2021 is actually back to 1990s. So if you compare between 2020, right, 2020 was actually the highest, about more than 300 billion of IPO proceeds being raised in the US. So that's actually really very crazy.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
So now the question now is, will this happen to Malaysia? So if you look at the stats,
I was like 3 billion ringgit, not even a billion
it's not sure, but it's still pretty interesting because so far all of the proceeds has been rising and increasing. So in 2021, they managed to raise in total of 2.75 billion. 2022, 3.5 billion. 2023, this is just a target only. That they're gonna raise about 3 billion. It could be more. So that we don't know, but it's on the upward trajectory that IP.
I mean, based on the rate, we are only half a month into the year. We already have 3 IPOs.
Correct.
Right.
Yeah.
So, I mean, 35, 40 again is not a dream. It's very, very much possible. So, kudos, I guess, to Bursa Malaysia for keeping it up, right?
Yep. Correct. So yeah, this is basically just to sum up for IPO companies in Malaysia versus the US side. So in Malaysia, so far I have been reading all the prospectus. Their financials has been pretty okay, very healthy. But I think you need to cross check with SSM if you guys are really want to invest in that company. Yeah, that's the best way to check the facts, whether is it correct or not, or whether the data is accurate. And their valuation also has been pretty decent. I mean, tech company 15 times, sometimes 10 times, sometimes more than that.
That's ridiculous.
Yeah, it's ridiculous, right? And it's going for IPO. So you can see like there's a distinct difference between the US IPO and the Malaysian one. So US one is like 100 times, 200 times. No earnings. Yeah, that kind of thing. But for Malaysia, it's still pretty okay, I would say. And yeah, so is this a low risk investment? At the moment, it does look like it. Like a low risk. I mean, if you look at the latest one, TT Vision, it's 89 times oversubscribed.
Yeah.
Yeah, that is even, so I don't know how many times this company is going to go up once it goes public, maybe 2 times, you can say. Yeah. And final question is whether this easy money will last. Oh, MJ, do you have any comments on this question?
So the thing is that the money is actually not easy. And the reason I'll tell you is this. By my estimate, right, only 3% of the IPO fundraising goes to maybe retail investors.
Yeah, you got a point. Yeah.
So it's only easy for the big guy. It's not easy for the small guy. You have to like for example, the companies you mentioned there, I think I probably applied for like 7 to 8 of them. I've only gotten 1, maybe 2, which is actually a pretty good start already, right? And I managed to get some that actually, were in the upper quartile of returns as well. So that is something you need to know. It is not easy actually.
But it's easy for the rich people. Cash rich.
Or people who are the banks usually.
All right.
Now, one of the interesting things you gotta realize is that why is it that Malaysia can continue to IPO at this rate, right? When the US is like slowing down. Well, the reason is because Malaysian ruling, the way when they get listed, right, is very different from the US in that in the US, they don't care about earnings so much. In fact, they probably get more excited when the earnings are negative.
Okay.
Because to them, it's like, they're spending on the future, But Malaysia, we have a rule where it is highly encouraged that you are profitable when you go for a listing. Right? The thinking is sometimes like, well, how are you going to get PE without an E, right? If I'm not mistaken, there was only one company to my knowledge that has ever listed with a negative earnings, and that is, I believe, is Red Ideas.
Okay.
Apart from that, it has always been profitable. So in a world where the interest rates are rising, in a world where liquidity is shrinking or at least being constricted, then money becomes more valuable, right? If the supply of anything shrinks, it becomes more valuable, right?
Yep.
Therefore, when you use that money, because it has become more valuable, for you to give up that thing that is more valuable, you need to find something that is more valuable than money. And in this case, it would be companies that have earnings.
Yep.
And that's why so far, Malaysia can keep up with their, in fact, they are at probably a decade high. Right? They're of course not the highs of the 90s.
Yeah.
The 90s was a different dynamic. But today, this is how it is. So it's a much more controlled manner, but controlled kind of growth.
Yeah. So maybe you still expect more companies to go IPO also.
Yeah, I expect. I mean, our friends in the industry are complaining, working very hard.
Yeah.
to do briefings, to do things like that.
Right. Okay. Hopefully, I mean, there's more chance for us retail investors to actually manage to like balance and subscribe for companies. Yeah. But other than that, we also have FIRL Pro for you. I mean, not all IPOs companies can make money. Also, those companies that is already existing in the main market, ACE market, you also can find them and make money out of it. And this is proof. You can see that our FIRL Pro stock performance has been doing pretty well. I believe we're going to be updating these stats most likely next week. End of this month. Yeah.
After Chinese New Year, after the first few days of Chinese New Year.
Right. Okay. So, but hint, the company A, if I recall, this return is going to go up to 90%.
Oh,
yeah, 80 to 90%.
Wow.
Yeah. So, yeah.
But don't jinx it. You never know. The next 2 weeks, drop by half.
Yeah. But yeah, so FIRL Pro is basically our program that we actually give you 2 stock reports and 1 big picture report for you to actually review every single month. We try our best to actually generate 2 stock ideas for you, minimum. And whether this stock will actually be in the FIRL Pro or not, that is up to us to decide. Yeah, and so far, the companies that we have selected into our portfolio has been doing pretty well. So yeah. And if you want a free sample of FIRL Pro or even our SIB program, you can actually get it. We'll put the link, free access link in the description and comments down below. So yeah, that's about it for today's video. Anything to add?
Yeah, guys, as usual, thanks for staying all the way until the end. Go follow us on our social media, Instagram, join our Telegram group chats. And yeah, looking forward to seeing you next video.